Hey going, it's Justin here from Simplified Investing. In this video, I wanted to put together basically a layout for someone who hasn't traded stocks before to get that knowledge and experience to get into trading stocks and feeling more comfortable when you do get started. With that being said, I will walk through 10 steps into what I believe can help you get prepared for trading, whether this be funding your brokerage, opening a brokerage, trading, some plans, some studies, whatever it might be. I will cover all 10 of those steps within this video. So basically, getting started, step number one, you're going to have to open a brokerage. Some common ones are going to be Robinhood, Webull, Thinkorswim is also good. I personally am a big proponent of Thinkorswim. I will show you guys how to open that right now. So basically what you'll do, again, three common ones, Robinhood. It's going to be Robinhood right here. All you have to do is log in or go to Google here. You can open Robinhood. They have been in the news a lot recently from some of their recent actions. I don't agree with their actions. I understand why they did them. But it is it's a great app to get started. It is the most user-friendly app for those beginning by far. So if you are getting started and looking for that simplicity, Robinhood is going to be the best for you. They don't offer all of the amenities that Thinkorswim or Webull do, but it is very user-friendly, and almost anybody who signs up can find it very easy to use. So if you are looking for simplicity and ease of use, Robinhood is going to be your number one go-to. Now, another one that I mentioned is going to be Thinkorswim. Thinkorswim is going to be powered through TD Ameritrade. It is going to be their laptop or their web-based platform. It is a very strong platform to use, and by far one of the best that is available on the market. I personally have found Thinkorswim to be the best desktop trading platform that is out there, and something that I use and we teach within our private course. So again, Thinkorswim will be through TD Ameritrade. That is going to have a lot more complexity to it, but complexity is good in the manner that you can get level 2, you can get charts, you can use scanners, you can get an abnormal option flow, whatever it might be that you're looking for. Thinkorswim does offer that to you. Thinkorswim, primarily a web-based or desktop-based platform, not so good on mobile. The other one that's good on mobile, the two that are good on mobile, so if you're using your phone, will be Webull and Robinhood, both very good on mobile. If you're looking for more of that advanced mobile charting, trades, and whatnot, Webull is going to be that option for you. Again, Robinhood is just there for its simplicity, hence why it is so commonly used, is because it is such a easy platform to use and understand. So the three are going to be Webull and Robinhood, great for your phone. Webull a little more advanced, both great for your phone. And then Thinkorswim, if you have that time to sit down at a desktop and actually trade on a computer, Thinkorswim is by far going to be that best platform that you can use. Step 2, now that you open your brokerage, now what do you do? Great question. What you'll do next is going to be funding that account. So what do I mean by funding that is typically it's going to be an ACH transfer from your bank account. So once you get into this app, you open your account, you will be able to fund the money from your bank account into the particular brokerage. So an ACH transfer, to note, will typically take 3 days to settle. So if you transfer your money in and you're wondering why it's not available right away, it does sometimes take 2 to 3 days to settle, especially with that recent influx of traders coming into the market from Gamestop, crypto, the surge in the stock prices, all of that causing that great flow of retail traders. So it can take typically 2 to 3 days for that ACH transfer to settle. However, just know when you do initiate the ACH transfer, it does typically take 2 days. So don't get impatient if you can't trade right away. Use that time to further study and learn. Third thing, now that you have your account open, now what do you do? The third thing that I recommend doing is finding studies and trading strategies that work for you. We live in an age where we're grateful to have things like YouTube and Google that can provide you all this knowledge and trading tools that nobody previously had. So you can look up here, some common beginner studies are going to be RSI. That is going to be one of them. MACD right here. You can find thousands and thousands of different studies within Google and YouTube. You can understand them studies, or you could do things like EMA, like an EMA versus an SMA. Whatever it might be, that is going to be the easiest way to actually find studies and learn them just by doing that. Now, I will walk through the 4 that I personally use when I'm trading, and that is going to be price action. So if you type in price action trading, that is going to be one. Basically, price action is going to be the candlestick moves and setups and what you can understand from those candlesticks rather than just seeing up and down moves. You can get a lot of readings from that, and that is going to be what is called price action trading. Second thing I do is called trend trading. As you guys have heard, I'm sure before you even started trading, is always follow the trend. Trend trading is going to be where you're following that trend, utilizing good setups within that trend, using price action, volume, and more to find a good setup to get in within that following trend. Third thing I do is going to be using support and resistance. Basically, support and resistance, if you've heard of supply and demand zone, that's essentially the same thing. Where are we seeing buyers? Where are we seeing sellers? Now, that's just from previous movement. That doesn't indicate future movement, but it gives you price levels to watch going forward in the future to say, hey, this stock is breaking out of this pattern. Let's see if we can push to all-time highs. Just for example, using support and resistance. The last thing I use is going to be volume, and volume is probably the most important concept within my trades. All of the trading and all the teaching that we do revolves around volume. You really want to follow volume when you are making a trade. You want to make sure that it's liquid and there's a lot of buyers or sellers pushing this move. Oftentimes, volume in trends can lead to further advancements to the upside or downside, vice versa, if you are in a downtrending market. So that being said, those are the 4 that I use. By no means the ones that you have to use, but they're 4 great ones to learn and understand, and you can always utilize Google and YouTube to find further studies. So the fourth thing, now that you have some studies, how do you know which stocks to pick? Great question. This is where you will utilize a scanner or a watch list to use to find those plays. Whether you're trading penny stocks, whether you're trading large cap stocks, whether you're trading options like we do, there are a vast amount of resources at your convenience that you can use. So the first one that I'd recommend doing is going to be utilizing Finviz. Finviz is going to be a free scanner. So here's what you'll do. So if you're one that likes to trade penny stocks, typically the most common penny stocks that are traded are ones that are going to be top gainers with volume. Hey, Finviz does that work for you. You'll obviously have ads anytime it's a free service. Right here, Finviz has this for you. Hey, look at this top percent mover. Then you can get this chart right here just by seeing this, and you can see all these top gainers here. Then you can also go in here and you can see, hey, it's went up 6-fold in volatile trading after Arrowside system purchase. This is just an example of how you could use Finviz to your advantage, or you could see things like unusual volume. Hey, perhaps unusual volume can lead to further upside or downside depending on the trend that you form. Finviz is going to be great for using this in a free scanner that you guys can use to find those setups and stocks that you want to play. Now, from this, you can change your watch list every day, or if you're trading, say, large caps, you could add all common large cap stocks to trade, whether this be Microsoft, Apple, Facebook, Google, Disney, Netflix, JPM, whatever it might be. You can add those within your watch list and then consider those going forward. Second scanner that you can use. I mentioned Thinkorswim before. This platform right here in the background that you see is going to be Thinkorswim. Thinkorswim also has a great scanner feature. If you go in here and hit load scan query, this is going to be a preset scanner, do top 10 active. Now, hey, we can see the top 10 most active stocks within the day. So something, if you're a large cap trader, hey, let's check out Tilray and look at options on that. We are pushing up almost 40% here intraday. Something to consider, they're both great resources to use. Finviz is great if you're not on the Thinkorswim platform. Thinkorswim also has great custom built scanners within it and scanners that you can tweak and apply to whatever needs that you may need. The fifth thing is, this is going to be one of the different parts of this, and one of the hardest parts for people to actually do is journal your trades. I know a lot of people aren't interested in actually journaling your trades, but I can tell you that it's going to help you greatly in further advancing your trading. And why or what can you do within a trade journal? One, you can go to Google and type in trading journal. There's templates on there that you can use. If you type in trading journal here, you can find all these templates, whether you want to use them or not. That's up to you. But why do I recommend using a trading journal? This is to track your trades, and really the biggest things that you should do are to the date of it, the entry, the exit, and why you traded it. The why is so important within this is because you'll find that, say you run through a month of transactions within your trading journal, and then you say, hey, you go through and note, why was this a winner? Why was this a loser? You'll see that a lot of your losses will maintain or go around the same concept or reason why it was a losing trade. For myself, when I started doing a trading journal about 5 years ago, I noticed, hey, two things that really made me suffer the most losses: not waiting for confirmation and getting impatient, chasing higher highs. Those two things accounted for 85 to 90% of my losses. So by going through, you can understand, hey, what are these abnormalities within my trades that are causing these to be losers, or why is this a winner? So journal your trades. I know it feels like, or it may sound like a lot of work, but it can greatly help you take your trading to the next level simply by understanding the trades that you are making and reviewing your past performance. The sixth thing, we'll head back to the Thinkorswim platform here. Backtest your strategies or your studies. What do I mean by this? Practice them. If you don't feel comfortable using your real money practicing, Thinkorswim has this great thing called on demand. What is on demand? On demand gives you the option to replay any day in the market and hypothetically trade that day in the market, and then you can practice your strategy and studies within that. Why am I a big proponent of backtesting? Because if you just go in hindsight right now from last Tuesday and you can see last Tuesday's movement, that's all going to be hindsight. When you backtest, are you able to put together everything and actually execute in real time, or can you just do it in hindsight and not do it in real time? So play back in this on-demand feature and understand what's going on and be able to execute in real time versus just seeing the moves that already happened and thinking about how you'd execute off of them. This also goes into paper trading. When you do backtest this, you will be paper trading. And the biggest thing to note is, while paper trading is good to backtest a strategy and get more comfortable, it does reduce your emotions. 90% of trading mistakes do come from emotions, and that is going to be eliminated paper trading, because when you are paper trading, say you have a $200,000 account, obviously if you blow up that paper trading, you don't have any monetary attachment to that and you won't feel the harm from that. But if you do play with real money and you lose that, obviously it's going to be vastly different. So take that into consideration. Note that paper trading and on demand are great for backtesting. They aren't great just to throw around and just play around without backtesting. The seventh thing is, from your backtesting and your studies and whatnot, change your variables as needed. Say, hey, maybe this study doesn't actually give me an accurate signal. Can I change this and use this study? Say I don't want to use RSI, I want to use MACD, or I don't want to use price action, let's just use volume. Whatever it might be, you can constantly tweak that and backtest it to formulate the best strategy that you can have to maximize your winning probability. That's really all that it is when you are trading. You want to maximize your risk to reward and also make the probability in your favor of a winning trade. Changing the variables and strategies as needed to fit will help you do just that. The eighth thing, and this is one of the most important things within this. When traders start, they don't have any plan. Create a plan before you get into every trade, before you even get started trading. Is your plan for 2021 in trading to beat the market? Is it your plan to make a 25% return on the year? Is your plan to make a 100% return on the year? Whatever it might be, break that down into long-term goals and short-term goals / plans. So before I enter a trade, I always recommend people having an entry, an exit, a stop loss, a target profit. So you get these entry and exit points. You aren't just trading just to trade like a casino. Actually have a plan and a strategy behind all of your trades rather than just entering for fun. So say you find a strategy and you can say, hey, my plan is to utilize this bottom bounce strategy that I found to be effective utilizing RSI or whatever it might be. Use that strategy and actually have a plan versus just trading for fun and essentially gambling your luck away on the market. So actually have plans, actually have strategies versus just feeling like you're gambling and have no clue what you are doing. The ninth thing is constantly learn and don't just stop after you read one study. There are so many studies and so much work put into this to really help you and utilize these sources that you can see results from. So if you're just studying RSI, for example, and you think that's the holy grail of the indicators, unfortunately it's not. There is no one single indicator that will make you profitable by itself. So constantly learn. If this study doesn't work, like I mentioned previously, go and try to find new studies that work. Whether you're using like an Ichimoku cloud, for example, or you're using the VWAP, whatever it might be, vast differences in these studies can help you find those results that you want. So find different studies that you like and change them as needed. Don't stop learning after the first week when you figured out how to use the RSI, for example. So the biggest thing is constantly keep learning and don't just stop when you learn one study. The 10th and the last thing is, I've seen this way too many times. Don't give up after a losing day or a losing week. If you have a loss, you have to understand within trading that it does happen. Don't just quit from a losing trade because you lost and you're scared to trade. Now, understand that it happens and learn from it. You will face losses every single day that you are trading. It's inevitable. It happens. The biggest thing is, can you take that ego hit, understanding that losses are part of it, and move on from that? Again, don't just quit from one loss or two consecutive losses. And the way to think of this is, for example, if you have a 70% probability of winning within your strategy, hypothetically, you could face 3 losses in a row with a still highly profitable strategy. So understand, with probability doesn't mean certainty. So with that being said, understand you will face losses. They are part of it. Learn from them and minimize them is going to be the biggest thing. The last thing is, it won't be an overnight success. Make sure that you constantly learn and study and realize that tomorrow you just start trading today. Tomorrow you're not going to be making 6 figures. It takes time. You have to understand and digest. And the biggest thing is, watching the markets and actually trading will be the best learning tool that you can use versus just trying to read a book or learn studies. Yeah, those are helpful, but the biggest thing is getting that patience, that practice of trading on your own time. With that being said, this wraps up basically a beginner's guide on how to get traded in 2021. If you guys found this video helpful, if you could like and subscribe, it would help us a lot. And if you are interested in joining our private team to get started trading in 2021, feel free to check out simplified-investing.com to get our daily course, our alerts, and mentoring. We would love to have you guys on board. With that being said, this wraps up this video. I hope you guys have a great day, and I hope you guys take the jump into actually trading. Thank you.